others in charge of turning around businesses. This is where she developed skills in fintech, digital transformation, and artificial intelligence. She also sits as a board director to three companies, two of which are in technology: Ceden Technologies Incorporated, Surpass Incorporated, publicly listed technology company, and PruLife UK Philippines. Also a trustee FinTech Alliance. Let's give a warm welcome to Miss Ida Chongson.
Thank you, Veda. Good afternoon, FinTech Alliance members, guests, and all those joining us via simulcast, FB Live, in Alliance page, shared also in CIC and NPC FB pages. I'm Ida Chongson, your host and moderator for today's webinar on optimizing alternative data for inclusive credit access. May I request first for everyone to please pause, bow our heads for a short prayer to be followed by the Philippine National Anthem.
Our Heavenly Father, the fount of all goodness and grace, the cause of wisdom, the source of intelligence, we welcome you, O Lord, to this auspicious gathering of your beloved, who continuously give you thanks for every opportunity to learn something new and become fruitful to the works of your creation. We humbly come to you, not because we are worthy, but because we find ourselves in need of you, who is our strength and our hope, to continue despite the challenges we face in health, prosperity, and our solidarity with one another. We pray that today's gathering, made possible by the grace of advancements in technology and social media, becomes successful in its endeavors, so we can offer it back to you as our humble offering to honor you, glorify you, and love you through our deeper connection with everyone. May we find bliss in today's session and become more productive children and co-creators of the earth. This we ask and pray through Christ our Lord. Amen.
Mga kababayan, ang pambansang awit ng Pilipinas.
Kayang magiliw, ewas magsilanganan, alam ng puso, sa dikit mo'y buhay. Lupang hinirang, tuyag ka ng mag-ibig, sa manlulupin, di ka pasisigil, sa nagagang tutok sa simoy at sa langit ng bagaw, ay ginatang tulang awit sa pagkayang minamahal. Ang isang ng patawad mo'y tagumpay na nag-iindig, ang bituin at karoon niya kailan pa may di magdidinig. Luman ang araw ng walhagit pagsinta, buhay langit sa piling mo. Ang inigaya ng pagkay mga aking, ang mamatay ng dahil sa'yo.
For the welcome remarks, may I call on the Executive Vice President and Chief Innovation and Inclusive Officer of RCBC, who is also our Alliance Chairman, Mr. Lito Villanueva.
Thank you so much, Ida. And again, good afternoon to everyone, to all the FinTech Alliance members, and of course to all our speakers and panelists this afternoon. Welcome to this very important webinar wherein we will be talking about alternative data. So we have seen the emergence of alternative data as another way of being able to capture or to cater to the unbanked and underserved market. And we are very grateful that we were able to get the time from our partner regulators, starting from the National Privacy Commission, the Credit Information Corporation, as well as from the Bangko Sentral ng Pilipinas. So this afternoon, we will be able to hear from all of these regulators and government agencies new trends and new policies that we would want to hear, that we would want to know from them, especially on how we will be able to have a sort of a hybrid way of using traditional data vis-a-vis that of a alternative data. So without further ado, I would like to again invite everyone to listen in and also for you to participate in this particular forum by way of providing all your questions. Thank you so much and have a good day to all. Back to you, Ida.
Thank you, Chair Lito. Our program is divided into three parts. We have speakers' presentations coming from NPC, BSP, and CIC. After that, we will be having a Q&A panel session. Those who are not in the virtual room, do post your questions in the comment section of the live link of FinTech Alliance Facebook page. Please name the person who you want to address it to as well. And if time permits, we shall be endeavoring to flash as many questions as possible on the screen. Our third part of the session will be having an MOU signing with CIC and a pledge by Multisys, which we'll be discussing later. Let's begin. The lack of sufficient data has historically been an obstacle for banks, financial institutions, and online lending companies to extend credit to the unbanked, and thus an impediment to achieving financial inclusion. FinTech Alliance supports this initiative in finding solutions to this problem. We are privileged to have with us regulators, as mentioned from NPC, BSP, and CIC, to also be discussing this interesting topic on optimizing alternative data for inclusive credit access. To start off, our first speaker, her topic is going to be on the regulatory sandbox on data privacy. How very interesting. She is a lawyer assigned at the Compliance and Monitoring Division of the National Privacy Commission, where she is tasked to monitor compliance of various personal information controllers. She was previously part of the Policy Review Division, where she was actively involved in formulating policies, rendering advisory opinions, assessing data sharing agreements, and reviewing legislative documents. She is likewise the policy advisor for the bank and non-bank financial institutions, collaborating with various banks, local and multinational companies on the safe conduct of their businesses in connection with data privacy. Incidentally, she initiated the NPC Circular 20-01 circular on loan related transactions, which now prohibits collection and retention of phone and social media contact list, especially when this is on the context of harassment of loan borrowers. Her knowledge of data protection even goes beyond the Philippine borders, having been chosen as one of the Philippines' representative in the Council of Europe. Since joining NPC, she has served as resource speaker for various private and government entities such as the DBM, BSP, GSIS, Department of Labor, DTI, IACAT. Let's please welcome Attorney Ana Benjaline Puzon. Attorney Ana, the floor is yours.
Yes, good afternoon, everybody. Please allow me to share my screen. Okay. Okay, I hope everybody can see it. Or I think it's my face that's being shown. Can you see my power? Can everybody see my screen already? Okay. So I'm here to talk about optimizing alternative data for inclusive credit access. So indeed, technological innovations has come a long way. So from the onset of steam-powered factories in the first industrial revolution to the application of electricity to enable mass production in the second industrial revolution, to harnessing digitization through the use of computers in the third industrial revolution, the 21st century now heralds the dawn of the fourth industrial revolution with the widespread use of digital technologies across various industries. Nowadays, different industries can exchange information through the use of information communications technologies for a wide array of use, including sharing customers' data to offer financial services. According to research, financial inclusion is a significant catalyst of economic development. However, in the recent Financial Inclusion Survey report of the Bangko Sentral ng Pilipinas, more than 51 million Filipino adults remain unbanked due to lack of enough money, documentary requirements, or refusal to open a bank account, among others. Because of this deplorable state of financial inclusion in the country, unbanked individuals miss out on opportunities such as convenient access to financial services. This is the reason why the government has intensified its campaign for financial inclusion. However, financial inclusion cannot be achieved without necessarily collecting, processing, or sharing personal data to comply with the Bangko Sentral ng Pilipinas policy on customer due diligence. Incidentally, the collection, processing, and sharing of personal data is also crucial in the day-to-day operations of financial institutions to identify, verify, and mitigate credit risks. This is the reason why most financial institutions are harnessing the benefits of alternative data in providing and granting access to credit facilities. Thus, consumer data from billers, such as electric companies, water services, or telecommunication providers, and other entities that may have financial data of consumers may now be utilized as additional information to generate the financial profiles of individuals to enable financial institutions to mitigate their risk of exposure and help them make informed credit decisions. This is actually the norm now because of the new normal and during the pandemic when consumers are more willing to share their information through different platforms. This is the key principle behind central credit repositories and credit scoring entities whose platforms are utilized by submitting and whose platforms are utilized by submitting and accessing entities for their mutual benefit of ensuring reliable and standardized financial and credit information. Thus, in today's world, financial institutions can now harness the power of the service providers, which utilizes big data, artificial intelligence, and machine learning processing to generate consumer profiles, which may then be utilized for credit scoring. This enables financial institutions to have access to data that may be utilized to offer their services to a wider area of customers, even to those that remain unbanked. This use of innovation has enabled the finance sector to achieve financial inclusion goals, alleviate poverty, and achieve economic growth. Likewise, the financing sector are now able to tailor fit its products and services through the use of big data technologies, making them more capable of providing a wide array of personal products and services to a greater number of customers. However, While there are benefits in the use of alternative data in the financial sector, it may likewise present risks to the privacy rights of individuals in the same way the same is utilized to generate automated decision-making processes. Thus, while entities are not prohibited from utilizing such information, submitting and accessing entities are not compromised. In this regard, accessing and submitting entities are encouraged to adopt a risk-based proportionate approach in and bounds achieved by these technological advancements. Failure to do so will instill fear and widespread doubt and mistrust in these platforms. Among the data privacy issues which may be encountered when utilizing such platforms includes how data is captured, data storage, as well as transfer and retention of data. Because of these issues, personal information controllers, such as both accessing and submitting entities, are reminded to put in place data protection policies, ensure knowledge of their obligations as personal information controllers, and uphold the data subject's rights at all times. Indeed, the use of alternative data for inclusive credit access is a welcome development. However, the Commission likewise remains committed in championing the rights of individuals against those who will fail to counterbalance the benefits of these developments over the rights and liberties of data subjects. Thus, data subjects must be assured of their right to information and access by implementing policies to address the concerns of data subjects and providing all the necessary information to them, including the fact that their personal information will be used for different processing activities, such as for profiling, automated processing, or whenever their information will be utilized for further processing. Both submitting and accessing entities must bear in mind that they are joint personal information controllers and are required to comply with the relevant provisions of the Data Privacy Act, including, among others, processing personal information within the requirements of Section 4, 12, or 13 of the DPA, as well as adherence to the general data privacy principles of transparency, legitimate purpose, and proportionality, and upholding data subjects' rights. Proper safeguards must also be put in place whenever processing of personal data is outsourced or subcontracted to a third party service provider. Likewise, submitting and accessing entities must take into account Section 20 of the DPA and implement reasonable and appropriate organizational, technical, and physical security measures intended for the protection of personal information against any accidental or unlawful destruction, alteration, and disclosure, as well as against any other unlawful processing and exposure to unnecessary risks. In the implementation of appropriate security measures, PICs must take into consideration the nature of the personal information to be protected, the risks represented by the processing, the size of the organization, and the complexity of its operations, current data privacy best practices, and the cost of security implementation. To sustain the benefits brought about by optimizing alternative data for financial transactions, risk must be proactively addressed by conducting privacy impact assessments and having in place a disaster recovery plan. In this regard, the National Privacy Commission, being the primary regulator when it comes to data protection, is willing to provide guidance and support by providing regulatory sandboxing to ensure that these innovations are compliant with laws and to ensure that it complies with international data protection standards for the mutual benefit of all. Through such initiative, the Commission aims to reduce regulatory uncertainty, build trust, and and provide agile intervention. In utilizing alternative data for credit access, pushbacks and doubts from consumers may arise. Thus, it is in this case that personal information controllers are mandated to practice transparency at all times. This can be done by providing an explanation in plain language as to why data is being collected and for which purposes the same shall be utilized. By doing so, the possibility of encountering complaints and data breach is lessened, which in turn avoids financial and reputational risk. The Commission likewise encourages industries to adopt the privacy by design approach by embedding privacy into digital platforms even from the onset. By doing so, data privacy becomes a culture at the organizational level, making it much more easier to adopt processes and policy changes. By implementing the privacy by design approach, the design and implementation of the procedures and systems must be in accordance with privacy and data protection at their planning stage and during the whole duration of the processing, notably through the use of privacy enhancing technologies. Appropriate measures must also be taken against the development and use of technologies which are aimed wholly or partly at the illicit circumvention of technological measures protecting privacy. By doing so, personal information controllers, such as the accessing and other entities, will ensure that privacy risks are aptly mitigated. Through all of this, personal information controllers are assured that the Commission will ever be present to provide guidance and support to help promote widespread trust, accountability, and responsibility to the credit and financial industry. By doing so, the Commission hopes to guarantee the success of such developments to ensure national development and help spur the economy. Ms. Ida, I give the floor back to you.
Thank you. All right. Thank you, Attorney Anna. No, and now we actually see how NPC is really supporting innovation at the same time balancing and ensuring rights to privacy. And I really like that what you said about the having the privacy included already in the app by design approach. That's excellent. I know you need to leave, Attorney Anna, so I need to ask an ambush question here, which has already been asked, and I'm asked to ask you. So there you go.
Sure,
Okay.
sure, Ms. Ida.
There's a lot of talks about the open finance, and particularly with government sharing private information to the private sector. How do
Yeah.
you take that?
Well, ever since the National Privacy Commission has not shied away from these welcome developments, especially since the government and the private sector must work hand in hand for economic development. So, what we always say with the National Privacy Commission is that we don't prohibit the processing of information, specifically with the exchanges of information between the government and the private sector. But what we always say is that there should always be implementation of reasonable security measures to protect personal information so that the data subjects will also be protected as well.
Okay, I guess the level of argument would be how to qualify the reasonable. Anyhow, thank you, Attorney Anna. If you can stay, that'll be lovely. But we do understand that you have another speaking engagement. Thank
Yes,
you
thank
again
you
for
so
giving
much
us your
for
time.
having me. Yes. So thank you so much. I'll leave now.
Thank you. That's really really interesting, and I'm sure we'll be seeing a lot of sandbox when it comes to the NPC. Our second speaker, Attorney Ben Joshua Baltazar, was appointed as the public sector director and elected by the board as the president CEO of CIC, or otherwise known as the Credit Information Corporation, since November 2020. His background, he started in government service as securities counsel for the Enforcement and Investor Protection Department with the SEC. He eventually served as a technical executive assistant to the Office of the Chairman of the SEC while concurrently functioning as the SEC liaison to the CIC. In 2019, he was designated as the Public Sector Director of the CIC together with representatives from BSP, the Insurance Commission, while in such capacity chaired the CIC Risk Committee. In 2015, he was awarded as full scholarship under the Japan IMF Scholarship Program for the Asia or GISPA, and in 2017 acquired his master's degree in public policy international program from the University of Tokyo Graduate School of Public Policy, which, by the way, um, I teach there too. So his fields of specialization and expertise span both enforcement and policymaking functions on such topics such as securities law, competition law, economic reform policy, credit information systems, and financial sector regulation. Please welcome Attorney Baltazar, the President and CEO of Credit Information Corporation.
Hi, Ida. Thank you for that wonderful introduction. I guess before I begin my presentation, I do want to say thank you to the FinTech Alliance for inviting us over to discuss this very, very relevant and significant topic of alternative data. So I do want to give my thanks to Chairman Lito for extending this invitation to us. So if you would allow me to share my screen. Okay. All right. Okay. All right. So for CIC, the topic I will be presenting would be strengthening the Philippine credit registry and optimizing alternative data towards inclusivity. So my presentation will be divided into 4 parts. The first one will just be a general, quick briefer or background of the CIC, what we do, what we're about. The second part will also provide more detail on the CIC database, which is the largest and most comprehensive credit database in the country. The third segment will be more on topic with respect to the interaction between traditional and alternative data from the perspective of the CIC. And the fourth topic will also provide some updates on the reforms that the CIC is doing, and of course, those that are particularly relevant to this push for the adoption of alternative data towards inclusivity. So the CIC was created by the Credit Information System Act of 2008, and very simply, our main mandate is to operate a public credit registry by which we collect basic credit data from lenders, process the same, match the same to ensure that it is attributed to the correct borrower, and then maintain a database that can be accessed by both the lenders and the borrowers for purposes of verifying or reflecting their credit history and financial condition. So I decided to also highlight certain key terms in the CISA, which I think will be very relevant for the topic today, because you can't talk about alternative or non-traditional elements without establishing the baseline for what is traditional or conventional. So in this case, what would be conventional would be basic credit data, which refers to both positive and negative information that pertains to a credit facility. And of course, the CISA defines a credit facility as referring to any loan, credit line guarantee, or financial accommodation that is extended by a submitting entity. Generally, the submitting entity would be what we would know as a lender, and this will span any kind of lender, whatever the form. It could be a bank, quasi-bank, trust entity, investment house, etc. Okay, so this is a very simple diagram of how the CIC operates. So The lenders, which actually possess the credit information of their borrowers, submits all of it, both positive and negative. So negative would be what you would classify as, let's say, past dues and non-payments. There are private credit databases that only operate on negative information. The CIC is not just limited to collecting negative data, but we also collect positive data, which would reflect a borrower's payments over the course of the life of their loan. So this information is collected from the lenders that are submitting entities to the CIC. We do have a system to process it, to consolidate it, because a borrower may have several exposures across different kinds of lenders. So we have to match that to ensure that it is properly attributed to the correct borrower. And then there are two ways by which we output this consolidated credit information. It can actually be pulled directly by the borrower through our consumer credit channels, which is provided by one of our SAEs. And it can also be processed directly by the consumer. So if it is accessed through an SAE, a credit score can be acquired, which is a type of value-added service by which a credit bureau provides like a rating on the creditworthiness of a person based on a certain benchmark, which is derived and based on the credit information of the CIC. So this is another illustration of that. So it can be accessed by the borrower and can be accessed by the lender. So this is the, I guess, integrated diagram of how the credit ecosystem with the CIC at the center works. And I think I will have to discuss this framework in relation to alternative data, because this one operates on traditional basic credit data. So on to the second topic, which is that the CIC database is the largest and most comprehensive credit database in the country, with the most diverse set of data contributors. So as I mentioned earlier, it doesn't matter what the form or type of entity that engages in lending is, it is covered under the CISA law. And currently, our data is actually collected from 600 submitting entities. So these are entities that regularly submit their data to the CIC, and this data actually refers to actual living, breathing borrowers. So the database has been live for quite some time and is actually also being accessed by 131 accessing entities. So the requirement in order to become an accessing entity is that you have to be a submitting entity and you've submitted at least 6 months of data, which will qualify you to actually access the data within the CIC. So as I mentioned earlier, we do have accredited credit bureaus who can access our data for the purpose of generating value-added services and products. This would be CIBI, CRI Philippines, and TransUnion. And just to give you an idea of how big the CIC database is that in terms of unique data subjects, we already have 29 million borrowers in our database, and among that 29 million, 96,000 are actually corporations. It's not reflected in our in my slide deck, but of course there is information on the borrower, but every borrower has a loan contract, and that data is also submitted to us. And right now we already have over 100 million loan contracts submitted in our database, because naturally it's quite possible and even expected that certain borrowers will have more than one loan contracts or outstanding exposures, especially like in the case of businesses, they would probably have a lot. So it spans all types. This is just a breakdown, which actually illustrates how diverse our database is. Okay, so on to the actual heart of the topic, which is on traditional data. So this is the CIC credit report. It is a reflection of basic credit data containing both positive and negative elements. It will contain your personal data, your identifiers such as your IDs, the negative event, such as non-payment, settlement, court cases, etc. Your active accounts, which I mentioned earlier. So your loan contracts will be here, which reflect the principal, the tenor, the terms of payment, even the pricing, such as the interest rates. It will also be included in your credit report. And of course, the contract details, like which bank, what date it was taken out. So these are essentially the conventional elements that make up a credit report. Okay, so credit score, of course, is provided by our credit bureau, which is a number between 300 to 850. I believe this is under the FICO standard. So a good credit report would be at around, a good credit score rather, would be at around 670 and up. Okay, so this is the conventional, the baseline information. So where does alternative and non-traditional data come in? Well, we have to start first with the definition of alternative or non-traditional data. And this definition was pulled from a pending bill in the US Congress to amend the Fair Credit Reporting Act. And the definition is data related to telecommunications, utility payments, rent payments, remittances, wire transfers, data otherwise not regularly included in consumer reports issued by consumer reporting agencies. So there is a pending bill right now in the Philippine Congress on alternative data. So naturally, we had to tweak this language to conform to the Philippine setting because we do not have consumer reporting agencies here. And the CIC is part of the technical working group for this bill. And we decided to decouple alternative data from non-traditional credit data. So the proposed language that was suggested in the draft bill would be to define non-traditional credit data as still payments data, because credit data is payments data, but made in the course of transactions that are involving but not limited to telecommunications, rent and leasing, real estate purchases, utilities, even condominium and rental dues, whether paid in person, online, or through wire transfers or remittance channels or other similar payments. So the reason why we wanted to make this specific distinction is because of the idea that under CISA, it's definitely very clear there that it refers to payments, repayments made in the course of a loan or a credit that is extended. What is unclear is the idea of rendering service on credit, which is what is happening when it comes to rent, leasing, and telecommunications, wherein you enjoy the benefit of a certain service and then you pay after. So much so that the obligation to pay is there, similar to what you would face if you took out a loan, to the point wherein if you do not pay that loan, then in fact, the usual parlance is still used that you are in default of your obligation to repay. So the idea of credit data is still fundamentally tied to the concept of repayment because of an obligation to pay. Whereas alternative data refers to these newfangled non-traditional data sources such as geolocation data, point of sale and online transactions, device data, internet activity, and social media posts. So these are the proposed definitions under the pending bill. So, of course, right now, the CIC does have the power to expand its covered entities, provided it falls under the definition of credit. That's why we do have an outstanding circular wherein at least 4 utility and telco companies do submit their data for us. But as I said, there's no harm in refining this even further. So, what is the role of alternative data vis-a-vis traditional data? Well, very simply, we do have a chicken and egg problem when it comes to credit data. As I said, credit data revolves around repayment data. In order for that to be created, you would have had to have been extended a loan, which means it's a problem. And that's how we observe those who are credit invisible, underserved, and credit newcomers, that they don't have traditional credit data or history because they are disqualified or not extended the loan because they don't have a credit history. So this is not, a chicken and egg problem that is unique to credit. You see it for job applications wherein in order for you to get a job, they require job experience. But if you don't have any job experience, how can you get a job? Another similar analogy would be if you're applying for a visa in another country, there is a preference that you have visited that country already and have returned from that country. Unfortunately, in order to visit the country, you would need a visa. So that's the main challenge with traditional credit data. And that's actually where non-traditional alternative data come in, because it's complementary and can provide a 360 view of a borrower's credit profile at all stages of their credit life cycle. So even before a person is extended formal credit, which is the starting point for traditional credit data to be monitored, that person can already show proof that they are indeed creditworthy. So I'd also like to draw attention from the takeaways from a recent event conducted this year by the Urban Institute on financial inclusion, lessons learned, and what's next for innovations on alternative credit data. And I think these anecdotes and these quotes perfectly capture the role of traditional alternative data vis-a-vis uh, alternative and non-traditional data, which is that alternative and non-traditional data provide entry points for those that are underserved to build their credit. So in order for them to actually showcase being credit-worthy, we don't necessarily just have to rely on the traditional credit information, especially if it's unavailable. It will require some time for them to be onboarded into formal loans to actually reflect traditional credit information. But that doesn't mean we should close the door on them, especially with the advent of non-traditional and alternative data. So for example, it is also mentioned here that with the advent of alternative data, you can reflect a person's full financial record without necessarily being strict about the requirement that they should have a loan first. Because as I said earlier, loans are good indicators of creditworthiness because it shows that a borrower was able to pay an obligation. But not all obligations are loans. You have utility payments, you have rental payments, you have purchases made on installment, which may not necessarily fall under traditional credit data, but can fall under non-traditional credit data under our proposed definition. Now, even assuming you do not have those kinds of payments, such as if you're a young individual, your alternative data, which can be derived from your location, your social media activity, as well as your online purchasing payments, can also be factored in and become a consideration to reflect your full financial record. So perhaps to just summarize, since I'm already in overtime, the goal really of the CIC is to get everyone on board, of course, on traditional credit data. But we do understand the limitation of that, which is it will not be reflected unless a loan is actually extended to these individuals or borrowers. So in order for that to happen, in order for them to be prepared and onboarded, to have a track record under traditional credit data, then we will rely and we will encourage, and to the extent that we can collaborate, on the use of non-traditional and alternative data as an onboarding measure. So it is complementary. It is additive and not a substitute for each other. The idea there is that once these borrowers can, have better ways of representing their full financial record through alternative or non-traditional means, they can now apply for loans from more traditional lenders, and that's how they can build their traditional credit data. And of course, still continue building perhaps the non-traditional and alternative data points to further complete their financial record. As I mentioned earlier, to provide a 360-degree picture of their creditworthiness and capacity to repay. So to further this kind of drive and initiative, we are participating in these legislative measures and policymaking initiatives that recognize non-traditional alternative data. Internally, we are conducting big data and analytics projects and collaborations to improve and identify the gaps we have with traditional credit data. And of course, as I said, we do have an open policy towards our SAEs and accessing entities to use our CIC data together with other data sources to come up with a more complete picture of a borrower's credit profile. And lastly, of course, we continue our consumer protection and financial literacy advocacy programs through our webinar series, CIC Academy, our expos, and of course, joint events such as this that we have here with FinTech Alliance. So I'm going to stop my presentation here, and I'd like to thank FinTech Alliance again for giving us this opportunity to address this rather relevant and growing phenomenon of non-traditional and alternative data. So thank you, and back to you, Ida.
Thank you. Thank you, Attorney Ben. You know, it's good that there's a couple of things that I do want to mention there, which is already there's a coordination with all the credit info providers, TransUnion, CRIF, CIBI. The info is consolidated. And if I may, there's a few notes here. If it's okay to share your slides with our Alliance members.
Oh, yes, of course. This is cleared for dissemination. No problem.
Excellent. We're oozing with questions already, but we'll tackle that later during the Q&A panel session. And we're looking forward to that Senate bill. The bill that's in the Senate, I understand, should be out and hopefully soon, because that alternative data can certainly help two things: us creditors in terms of having expanded information. At the same time, as you said, these alternative data, such as using utility, rental, can help establish credit worthiness, especially those without loans yet. Thank you for that.
Yes, that bill is actually with the House of Representatives, not yet with the Senate.
With the Congress and then with the Senate. Okay, thank you. Sana bumilis. Thank you. We'll call you back again, Attorney Ben, during the Q&A session. Our third and final panel speaker, or should I say speaker, is Ms. Joyce Suficiencia, Director of Bangko Sentral ng Pilipinas. As the Director of the Financial Inclusion Office of BSP, Joyce is deeply involved in various initiatives to drive the BSP's financial inclusion agenda forward. This include policy development and advocacy work with a particular focus on inclusive digital finance, micro, small, medium enterprises, and agricultural financing. She also currently represents BSP as the chair of the Interagency Committee on Use Cases of the Philippine Identification System, or otherwise known as the PhilSys, or should I say the National ID. Joyce joined BSP 20 years ago as bank examiner, and prior to her current assignment, she was involved in strategy management and enterprise project implementation of the BSP. Director Joyce, the floor is yours. May we call on Director Joyce?
Hi, thank you, Miss Ida. If I can request my colleague to pull up my slides, please. Okay, so good afternoon. Thank you to the FinTech Alliance for inviting the BSP to be part of this webinar series, and of course for the opportunity to share our views on optimizing alternative data for inclusive credit access. Next slide, please. So I don't need to belabor the importance of credit. Rich and poor need it and use it as part of their financial toolkit. For some people, credit allows them to achieve their aspirations. Next slide, please. Whether, may I request, Nat, are you operating my slides? Next slide, please. So, it's still not showing na. It's stuck in the cover slide. Sorry about that. So let me just continue. Sorry for that glitch. Maybe the organizer, if the organizer can please upload my slides. Maybe Velda can share. Okay, so can we go back to slide number 2, please? Okay, there. Thank you so much. So as I mentioned earlier, we all know how important credit is. Whether you're rich or you're poor, we all need it, and it's part of our financial toolkit. For some people, credit allows them to achieve aspirations, whether it's a home, a college degree, or a business. But for others, it's really a way for them to smooth expenses. And based on our on BSP's 2019 Financial Inclusion Survey, funding daily needs came as the top purpose of borrowing, followed by business and education. Meeting these goals not only means being able to get by, but also being able to increase income potential toward greater financial health. Next slide, please. And based also on our 2019 Financial Inclusion Survey, next slide, please, 41% of Filipino adults have outstanding loans. And unfortunately, many Filipino borrowers, in fact, 54% of them rely on informal sources of credit, with only 3% having borrowed from a bank. 48% of these borrowers perceive borrowing from financial institutions as difficult, primarily because of lack of documentary requirements. It's in the next slide. Next slide, please. We're stuck in slide 2. So, as mentioned also by Ben earlier, because they're unable to provide documents and access to formal credit, they remain largely credit invisible, even when they have been borrowing and responsibly repaying their loan for a long time. Let's go to slide 4, please. So, the phenomenon of relying on informal sources applies not only to individual borrowers but also to enterprises. With a 2015 World Bank survey showing only 10.1% of enterprises borrowing from banks and more than 80% relying on internal financing to support their operations. The BSP's latest available data also shows that MSME loans have declined significantly over the years. For instance, the share of MSME loans to total banking system loans decreased to 4.6% in the first quarter of 2021 from 7.9% in 2015. Similarly, the contribution of MSME loans to total enterprise loans fell from a double-digit level of almost 12% in 2015 to just 7.8% in the first quarter of 2021. As in normal times, during the pandemic, the MSMEs turned to internal financing and their families to support their operations. According to a 2020 ADB survey of 1,800 MSMEs, 48% of MSMEs use their own funds for working capital, while 33.5% relied on family and close relatives. Only 17% applied for bank credit, and only 4.8% of those who applied were able to successfully obtain the loan. Next slide, please. Access to credit is clearly an issue and a challenge for many Filipinos, especially among MSMEs. And that's why this has been a key focus of efforts over the years, crafting and digital infrastructure that makes lending to MSMEs and the underserved market more viable. And of course, part of our initiatives is to promote innovations. And one such innovation is, of course, the use of alternative data, using technology to effectively use data and behavioral insights to serve the credit invisibles and the thin files. Evaluating credit worthiness traditionally involved an analysis of the historical credit exposure, credit line usage, repayment behavior, as well as length of time in employment and residence, which many Filipinos unfortunately are unable to establish, especially those in the informal sector and doing gig work, whether by choice or circumstance. This results in high borrowing cost or outright denial of loan application. And with no access to formal financing, they remain in the fringes, unable to establish a formal credit history. It ends up being a vicious cycle. So the use of alternative data for credit scoring can help break this cycle. Alternative data are information gathered from non-traditional credit data sources that can provide richer insight into a client's risk profile. By assessing a wider variety of relevant information about the credit applicant beyond what's provided in the credit report from the credit bureaus, banks and other lenders can tap new markets and reach the unserved. Alternative data can come in many forms. There's mobile data, airtime usage, digital transactions, geolocation data, social media usage, and the likes. So the developments in big data and artificial intelligence and machine learning have allowed the use and increased the reliability of alternative data for credit scoring. Next slide, please. So next slide, please. The recognizing the potential of alternative data in financial inclusion, our office at the BSP conducted a rapid survey of financial service providers to understand the current usage of alternative data in the country. Insights from this survey can help inform practical interventions to promote alternative data for financial inclusion. 146 lenders participated from the banking and financing industry. The respondents are comprised mainly of presidents and CEOs and risk and compliance officers. The survey was conducted in September this year. Just to note that we have yet to finalize the report, but for this presentation, allow me to take this opportunity to share the preliminary results of the survey. Next slide, please. So out of the 146 survey respondents, next slide, 36 or 25% indicated that they have adopted the use of alternative data. The low adoption of alternative data is true across the different types of financial institutions, except for fintech companies and digital banks, of where there are more than 55% adapters already. Not really a surprise there because we all know that these are the digital native lenders and possibly the more strategically positioned and incentivized to use alternative data with their inherent tech orientation and target market. It doesn't mean, however, that the other lenders won't and would and can't catch up. Next slide, please. No, go back now. 2 slides before. Slide 8 na. So based on the survey, the alternative data type that is used the most is the utility and telco data. And with the help of AI and machine learning algorithms, utility and telco payments and usage patterns are now reliably used as proxy to credit history. Ranking next to utility and telco data are mobile and data and social media. Of course, this makes a lot of sense considering their wide usage and penetration in the country. Looking at the sectors, MSMEs came as the top beneficiaries of alternative credit scoring. But in terms of loan product types, alternative data is used mostly for consumer loan applications. The survey respondents who use alternative data for MSMEs also indicated that they use the data mainly for business loans. 78% of the adapters indicated that they have realized tangible benefits from their use of alternative data and that it took them 2 years before the benefits were realized. Next slide, please. Next slide. For adapters, the top implementation challenge that had to be overcome is the development and testing of new risk models. Of course, it goes without saying that ensuring reliability of the risk model is crucial in order to take full advantage of alternative credit scoring. The lack of internal expertise and knowledge is also a challenge and is, in fact, the primary hurdle among the non-adapters. We see that a common concern among adopters and non-adopters is a legal and regulatory framework around alternative credit scoring. This is what we in the BSP hope to understand better to identify appropriate interventions where warranted. There may be a need to come up with a more concrete guidance, specifically on credit risk management techniques enabled by innovative technologies such as big data and machine learning. Next slide, please. Next slide. So, data sourcing and exploration came as the top, slide 10, Nat. Data sourcing and exploration came as the top area where support is required to optimize alternative credit scoring. This is almost intuitive because to use alternative data, the lender, to begin with, must have access to alternative data. But of course, it does not end with access to data. Data must lend to robust modeling to support reliable credit scoring. And this is another area where government and other external support is needed. Robust modeling would require significant amount of data to which some lenders may not have ready access. So facilitated shared industry resource for data modeling can also be explored. And in terms of regulatory guidance, respondents identified data governance, consumer protection, and model governance as the top three aspects of the alternative data usage needing regulatory guidance. Data governance, as widely understood, is the process of managing the availability, integrity, and usability of the data. To facilitate a trusted and dynamic data sharing ecosystem, guidance on data governance, both at an enterprise and the industry level, would be needed. And respondents are also concerned about regulatory expectations on the consumer protection aspect of alternative data usage. It is therefore quite timely that the BSP is now drafting the policy on data governance and ethical use of consumer data, of alternative data. So this is basically going to supplement the current governance standards relating to the protection and privacy of consumer data. Data governance is actually a key pillar of BSP's digital payments transformation roadmap. And of course, this is in recognition of the strategic importance of data in a digital economy. Another regulatory guidance needed is on model governance, and this is probably also related to consumer protection issues. There needs to be legal or regulatory framework for credit scoring, ensuring that these models are not only accurate, but also fair and inclusive. Next slide, please. So we have emphasized so far the benefits of alternative credit scoring, but as with any tools, innovative tools, it comes with risks as well. And some of the widely recognized risks of alternative data are around bias and discrimination, data privacy and security, interpretability, and accountability. For instance, there's risk that a well-intentioned algorithm may inadvertently make or perpetuate biased decisions and may discriminate against specific groups of consumers. The potential misuse of consumers' personal data is also a risk that needs to be properly managed with sufficient data privacy and security measures, promoting transparency in how data is collected, used, and processed. And the use of complex algorithms could result in a lack of transparency in how credit scores are generated. We all know that it's important not just to ensure that the prediction is reliable, but also to ensure that we know why that prediction was made. And in understanding this why, it would be possible to audit the fairness and effectiveness of the credit scoring model. And lastly, alternative credit scoring would typically involve multiple actors, whether for data collection, processing, or storage, establishing, therefore, the appropriate accountability for the quality and security of the data can be challenging given the multiplicity of the players involved in the data value chain. And we all know that not all of those actors necessarily belong to the financial sector. And this is where a more comprehensive and cohesive legal or regulatory framework might be needed to establish clear accountabilities in the data governance. Um, so for the way forward, for my last slide, next slide please, we see at least three imperatives for our lenders. Next slide, Nat. First is to participate in the open finance framework and actively support its objectives and goals of open finance, which aims to promote consent-driven data portability and interoperability. By facilitating access to consumers' data from multiple sources, open finance can support use of alternative data for credit scoring. There are open banking solutions in the market, for instance, that provides lenders ability to identify those small transactions that will help credit evaluators better understand the health and financial behavior of a potential borrower based on patterns and movements of their accounts. This can help verify income information for borrowers who may not be able to provide copies of their payslips and other traditional income verification documents. We also encourage collaboration with other players and stakeholders, and this can also be facilitated, of course, by the Open Finance Framework. We've seen banks partnering with fintechs to leverage on each other's unique expertise and capabilities on alternative data use. Another collaboration can also be at the industry level, an example of which is the Credit Risk Database Project supported by the JICA and the BSP. The CRD project pulls SME financial and non-financial data from, to date, 24 participating banks in order to develop a default prediction model that can be used to assess creditworthiness of a potential SME borrower. This can supplement the bank's existing credit assessment toolkit to improve their confidence and ability to lend to more MSMEs, especially those unable to provide collateral. Lastly, it's also important not to forget helping educate the public for them to better understand the financial inclusion implications of using digital payments and establishing digital footprint. We also need to foster behavior that not only supports favorable credit scoring, but also data privacy and security. Empowering our consumers with the necessary financial knowledge will help them take full advantage of the promise of alternative data for their financial well-being. So that's my last slide. Thank you very much.
Excellent. Thank you, Director Joyce. When you're mentioning about, yes, there's alternative data, but of course, it's not just the availability of the data. You did mention that we got to have that comprehensive and robust modeling, particularly because, what if the information's unreliable? So reliableness, you mentioned, there could be problem of being misused or insufficient algorithm. We here in FinTech Alliance, we understand all this. We're looking forward to it, and we are behind you in terms of the BSPs looking into the open finance framework. Please do stay on stage because we will now begin our Q&A panel. Attorney Ben of CIC, kindly join us as well. And again, reminder to our audience in FB Live, you can post your questions there, and our secretariat will endeavor to capture and share that here. I understand we have questions also here from our pilot participants. May I call on Chair Lito representing RCBC, Bianca Villarama representing Tala, and Norvin Aloro representing Asia Link. We'll pass it over to our panelists. I understand you have your questions ready, starting with you, Chair Lito.
Yes, thank you, Ida, and of course, again, thank you to to our speakers, no, for a very informative, insightful presentation. Of course, my first question, I think, I'll start with this question. Alternative data includes information and not typically found in consumers' traditional credit reports or customarily provided by consumers when applying for credit. Will this make alternative data more reliable for credit underwriting? So I think a question for Attorney Ben and of course for Director Joyce.
Thanks for the question, Lito. So just to follow through with my statement in the presentation, I don't think it's correct to use the term better or worse between alternative data and traditional data. I think it's more of a question of relevancy. When is alternative data relevant, and when is traditional credit data relevant? And I think the answer is very simple. It's based on availability. If you're talking about a borrower that's has regular loans, has been having well documented loan activities over the past couple of years, then why would you need alternative data if traditional data is available? So my general thesis and my observation is that alternative data is very relevant for those that are credit invisible, underserved, or new to credit, because what other information would they have to reflect their credit worthiness? So I think the attitude should not be whether it's better or worse, but whether it is more relevant to a particular borrower.
Thank you for that. I think we have Bianca. Bianca, you have a question as well?
Yes, thank you, Ida. So first, I'd also like to thank our regulators for their insightful presentations. It's always very encouraging to hear regulators talk about their efforts and initiatives towards the advancement of financial inclusion. So, based on the presentations of our regulators, we see that the government is really leaning towards regulating the use of alternative data, at least in for use in credit scoring. So my question would be, how can we avoid or manage regulatory overlap given the interplay of regulations by the PSP, also by the NPC and the CIC in this space?
Um, Maybe the short answer to that would be really meaningful collaboration among these regulators. That's the short answer. We really need to make sure that our regulations are harmonized and cohesive. It can't really be avoided, considering, as I mentioned earlier in my presentation, that there are multiple actors involved in this whole alternative data ecosystem. And it can't be just the work of one particular regulator. All these regulators need to come together to come up with regulations that support innovative use of data. Of course, with the end in goal, with the goal being promoting good consumer outcomes. So that's my take there. But maybe moving ahead of going beyond collaboration, probably what President Ben mentioned earlier, a proposed legal framework for alternative credit scoring can also support this collaboration by clearly delineating responsibilities, not only among regulators, but also among the players involved. So that's my take there, Bianca. Thank you.
Thank you,
Excellent.
Director Joyce.
Okay, I understand Norvin as well. You have a question?
Hello, good afternoon, and thank you for sharing your insights, Director Joyce and Attorney Ben. The use of alternative data heavily relies on technology, but this is still a challenge to many, most especially in rural communities. And we have been working together in championing financial inclusivity, but I want to know where we are now and the challenges that hinder us from truly achieving financial inclusivity, and maybe what else we can do to support this cause in the Philippines.
Who do you wish to answer that one, Norvin?
Maybe either Director Joyce or Attorney Ben. Either of them can answer the question.
Okay, I think I'll take a crack at it. So this is actually a very timely conversation to have. This morning I was just in one of our CIC Academy webinars that was directed towards cooperatives. So I would actually just like to subvert your notion that uh, it is a very challenging time because, as was illustrated by Director Joyce, if you look at access to credit over the past decade and even stretch it even longer, you can really see the advancements made by the initiatives of government and, of course, the trends in the private sector. So I think the question is not so much about the challenge, but rather how to optimize the collaboration. Because the way it works is that it's not like the government is the one dictating the private sector that, hey, why don't you guys launch app-based lending softwares or initiative. We don't do that. I mean, we have a free market in this country, and then what normally happens is somebody innovates, and then if the results are great, then the rest of the players come in, and normally government comes in to make sure that abuses and all of these things about proper uh, behavior are enforced. Now, of course, there's some timing issues there. Sometimes we're ahead, sometimes we're a little bit late, sometimes we're actually in sync. But the idea there really is that technology and its availability, even to the rural sector. In fact, I would even say that in order for the rural sector to be onboarded right now into the formal credit system, you will need technology. I mean, unless you're planning on, setting up brick and mortar bank branches on like all the islands in the Philippines, naturally, it's not a cost-effective way of going about this particular initiative. So definitely, technology is at the heart of any initiative. So I think the governor of the BSP already mentioned that we are on track to becoming a digital economy. Naturally, at the heart of that would be, I guess, the great equalizer, which would be technology. So I don't really think it should be cast as a challenge, but rather as an opportunity by which the private sector and government can really, engage in more meaningful collaboration and alignment.
Okay, you want to take a stab at that, Director Joyce?
Yeah, just to add to what President Ben explained earlier, for sure we are not yet at our ideal state, financial inclusion state. There are still gaps there, but I'd like to think of it as a journey, and we've made considerable headway over the years, and I think it's important to point out that the government has been doing great work in terms of infrastructure building, especially the digital finance infrastructure. There's the PhilSys already underway, and we really look at the PhilSys as a game changer for financial inclusion, not only because it addresses that often cited barrier of lack of identity, but really it's more than that. It's a digital identity platform, and as an identity platform that serves as a foundational layer for innovative services that can be facilitated by having digital identity. And that service can really be around data sharing, data collection, more seamless data collection. So PhilSys is one tangible initiative of the game changer initiative of the government that we're happy to see. And but beyond this hard infrastructure, there's been also a lot of soft infrastructure in terms of regulations, like our digital banking license, the open finance framework that we're putting in place, and other legislative initiatives like the Personal Property Security Act. So there, all these infrastructure are being put in place that will really make that we make the private sector can also appreciate and take advantage of, and so that they can viably serve the mass market, often overlooked by our traditional and traditional players.
Yeah, Director Joyce, I want to follow. I have a follow-through question to the excellent question of Norvin with regards to where we're at and about the PhilSys and the national ID. Where are we in terms of the implementation of the Philippine or national ID? Because I understand there's a bit of a backlog. There's like 3 months wait, and some areas are not actually having this. And I understand, but by having it, we know we can leapfrog in terms of getting a little bit more information in, and of course, financial inclusion. So where are we in the implementation of that?
Mm-hmm. Yes. So the PSA, the Philippine Statistics Authority, which is the lead implementing agency of the PhilSys, has actually made considerable progress, significant progress, considering the pandemic that we're in, which has made really the registration process quite difficult. But they've managed to register 30 million Filipinos already, and distributed close to, I think, 2 million IDs in the last couple of weeks. And they're targeting to have to launch the online authentication facility by year end and pilot that by year end. Hopefully, banks and other relying parties can start using that online authentication facility by next year.
Very nice. Thank you. May I know you still have some questions, our panel's still got some questions, but there are a lot of questions popping in our live chat. So may I grab a couple of them for now? We have from Mint. How do you democratize fraud data across the financial institutions to help credit scoring? And I would suppose this is for Attorney Ben.
Okay,
Yeah.
I'll have a crack at it. So, um, once again, the advantage of the way the credit information system is set up is that we collect both positive and negative information, and that is exempt from the consent requirement for submission under the Data Privacy Act. Now, the disadvantage of this kind of system is that it's actually laid out. I mean, these fields are laid out and set under the implementing rules and regulations. Although the CIC does have the power to expand these fields as they become appropriate. However, the focus right now really is to collect what is set out because these elements form part of the basic credit data that I was referring to earlier. So, in terms of democratization, my interpretation of that is how do we make it accessible to the lenders and of course the borrowers. To borrow a quote that I learned from my former boss, there is a tendency to believe that good credit subsidizes bad credit. So in the case of fraud data, we want to minimize incidents of fraud because what that does in effect is it increases the cost of credit across everybody. So the way we, I guess, avoid this is really for all of the lenders or submitting entities to the CIC to submit both the positive and negative information, irrespective of how their particular clients feel about it, because that's really beside the point. They cannot direct a bank or a lender to opt not to submit their credit data if it's bad to the
Is that right?
CIC. Yeah, so that's you cannot cherry pick. That's that would undermine the whole point of having a public credit repository because it has to be accurate. So if it is good, it must be submitted. If it is bad, it must be submitted. And that's effectively how we democratize credit risk scoring because we are here to serve everyone. So long as you submit data to us and you fulfill their minimum requirements, you can access the data and use it in your credit decision activities.
Gosh, I was of the opinion that those data should be automatically be, without the institution stopping it, it should be automatic. So I'm surprised that that's not the case at the moment.
Well,
Anyway.
we do have that technical issue we're in. We don't collect directly from the borrower, so we do have to get the lender to be onboarded into our system. But you never know. As we would
Something.
serve technology
Yeah.
can evolve. It would be great if it would be seamless. But right now,
And
that is how we work.
possibly something we can help with in alliance as well. I'd like to move and get take this other question from Francis of GXI. How to balance? This is more of an I think an NPC question, but I think if Director Joyce can pick this up, how to balance sharing of data across institutions and protect the customer's data. And I think you were mentioning this in line with the robust modeling that you were mentioning earlier on. Can you expand on this, Director Joyce?
Yeah. Yes, this is actually the objective also behind our open finance framework, empowering consumers to share their data for, of course, for their own benefit, to optimize its benefit. What the beauty of open finance framework is it establishes standards, data governance standards, data sharing standards that hopefully could engender trust in the data sharing ecosystem and promote essentially the objectives of open finance, which is consumer empowerment through data. So, short answer is having standards in place and players abiding by those standards. That's really the intent. For data protection, data privacy, we have the law around that already. So it's a matter of translating that into implementation standards.
Thank you. Thank you for that. Charlito, you have another question, right?
I just would like to have one last
Yes,
question
please. Yes,
for
please.
the panel, for Tony Ben and Director Joyce. One of the main objectives of the alliance is really on how we can expand financial inclusion, right? On how we can provide the unbanked and underserved have access to responsive and responsible credit. And of course, we have been discussing about this for quite a while, and because knowing the fact that most of the new to credit Filipinos would not really have the means by which they can access those credit facilities, no, such as from banks, for example, or other financial institutions. And because of that, they really go to the informal sector. That's why they are victimized by predatory lenders, and we have been talking about that in Alliance and with the NPC as well on how we can get rid of those predatory lenders, and we're talking about as well interest rate caps not to protect the interest of the consumers. So my question now is, how would the both CIC, for example, together with the NPC and the BSP, be able to fully support the adoption not really the adoption, but it's really more of having to have that um, hybrid adoption of both the traditional and the alternative data, so that we will now be able to cover as many Filipinos as possible. Because we commend BSP, for example, for having that initiative of coming up with a survey on the use of alternative data for credit underwriting, and also NPC for having, apparently they are about to issue a circular on regulatory sandbox on data privacy, and of course CIC being so open about having to have the fusion of alternative and traditional data. So how would you see this coming to fruition in the in the in our society right now, in terms of having to measure the success of our undertaking? For example, how would CIC be able to measure whether this particular initiative is gaining traction? And also for BSP, how would BSP or even NPC be able to measure this particular initiative?
Okay, so that's a very long question, Lito. So I'll try to answer it as comprehensive as I can. So I'll go with the last point you made. So how can we track the progress of this initiative? Well, as I said during my presentation, I believe that the place for non-traditional credit data and alternative data is really to complement the traditional credit data that we collect. And one of the ways we can see if this is rising is if there is significant activity in terms of new loans that are created. Because we can track
Mm-mm.
that in our database. As I said, we are embarking on a lot of big data analytics initiatives internally. We do have some partners that we are talking to provide us with that insight. And that's, I think, a statistic that would be very interesting for everyone. Because if all of a sudden we realize that new loan origination goes up, and remember, we can see the demographics because that's part of the data that's submitted to us, then perhaps we can cross-reference this with those activities that track the adoption of alternative data, such as what Director Joyce mentioned earlier through the surveys. So we can probably verify each of the things that we are observing because we can look at the consequence, and then of course BSP has a far greater reach than CIC, so they can also look at the variables by which you can measure adoption of alternative or non-traditional data. Now, the whole of government approach can be reflected by what I said earlier, that there is a pending bill in Congress sponsored by Congressman Joey Salceda to ensure that the adoption of alternative data and credit scoring is fair, of course, non-discriminatory, and there is even, I think, a study that is embedded in that particular bill to really look at the impact this kind of phenomenon will have on the underserved minorities and even those who are new to credit. So definitely, there is a push from all aspects of government because we see this as a game changer in terms of addressing the perennial problem of unbanked Filipinos. So definitely, government has recognized the potential this kind of phenomenon has, and we do have more or less a drive. I mean, it's not, I guess, as concerted as we would want it to be, but we are, there's still time. I'm sure the pandemic also caused certain setbacks in terms of coordination. But I think because of the current situation, it does give us motivation to redouble our efforts in looking at this initiative and working towards, as Director Joy said, providing what government should provide. Could be infrastructure, could be support, could be regulation. But at the end of the day, it's really the private sector that will drive this kind of activity. We're just here really to foster an environment to make it thrive.
Right. Thank you. Thank you, Attorney Ben. I'm sorry, guys. I know there's a lot of questions, and I know Bianca and Norvin, you have questions as well. We'd like to compile all these questions. We are in coordination with the BSP, CIC, and of course NPC with regards to the open finance. So there's something that whatever questions you have, we can actually include that and compile that to find solutions for this, or how we can address the concerns. Okay, with the comment of Attorney Ben, I would suppose with the help of technology that could be extracted as well in terms of those ones that are getting loans without actually having any other information other than paying their utilities and so on. I guess that can be gathered as well. We need to move on. It's a little bit unfortunate. This is a very one of the more and in fact I would say most interesting webinars that I've attended. But again, as I said, we are running out of time. So thank you so much, Director Joyce, Attorney Ben. Before you guys go, can we please have our photo up for our record? Can I request Veda to take the picture? Let's look straight into the camera. 1, 2, 3. Another one. 1, 2, 3. Thank you, everyone. We are now going to start with our final segment, which is the MOU and the pledge session. Thank you again for our wonderful speakers. Please do stay with us. Sorry, Attorney Ben just left. Please come back. We're going to have our signing. Okay, we have
And then photo op, yeah.
and to join us, witnesses, can we request Attorney JJ of Alliance and another representative from the CIC? We have the Memorandum of Understanding signing between CIC and FinTech Alliance, which Chair Lito will be providing us a brief on.
Yes.
Chair Lito?
Okay, yes. Thank you so much. Yeah, thank you so much. We have this collaboration with Credit Information Corporation and FinTech Alliance for for the use of alternative data and traditional data, so that all the members of the FinTech Alliance would now be able to gain access to the facilities of CIC, and also on how we can promote further collaboration so far as pushing for further inclusion. So I think, Attorney Ben, if you have a few words about this milestone collaboration between the Alliance and CIC.
Thank you for that, Chair Lito. So, just to be, I guess, consistent with what I've been saying in my presentation, we do welcome these kinds of collaborations because we understand that everyone has a role to play in the development of the Philippine credit system and to pursue the noble goal of financial inclusion. With respect to this particular MOA with FinTech Alliance, we do welcome the interest of its members to access their basic credit data with us and to harness it through the proprietary provider that they've selected, Scorebox, which I think will combine it, if I understand correctly, with
Yeah.
other sources of data which may be considered as alternative data. So we definitely look forward to the results of this collaboration because combining these two data sets will provide a 360-degree profile of the credit situation of borrowers. So we hope that this will actually jumpstart and allow and uh, onboard those financially underserved, invisible, and newcomers to the formal financial system. So we really appreciate this collaboration and look forward to its success.
Excellent.
We have
May
a
I
photo.
request? Yeah, may I request for the MOU document for a formal signing for the photo op, kindly raise the MOU, Chair Lito and Attorney Ben. This MOU is being witnessed by yours truly, myself, Ida Chongson, as well as Attorney Leia Panagihan, Attorney 5 of the Office of the President Legal Team, Credit Information Corporation. For the photo op, please smile. One, and straight to the camera. 1, 2, 3. Another one. 1, 2, 3. Can we have another one? Unshare the slide, please, so we can have just a picture. Kindly unshare the virtual MOU. Thank you. Okay, let's do this again. 1, 2, 3. 1, 2, 3. This MOU is a collaboration between the parties, aims to advance the use and exchange of knowledge that would contribute to the improvement of financial literacy and inclusion in the Philippines, and to promote the benefits of credit reports, financial technology or fintech, traditional and alternative credit data, and the use of digital platforms. This MOU is signed today, the 22nd day of October 2021, live here in the FinTech Alliance session. Thank you again, Attorney Ben. Thank you, Attorney Leia, and of course, Chair Lito.
Yeah.
Chair Lito, could you kindly
Yes.
stay for our
Yes.
final session?
Thank
Thank
you.
you. Thank you so much. Next up, we have good news for Alliance members. Chair Lito will in a minute discuss Maltese's pledge of support to the Alliance. But before you do that, please join us, Mr. David Almirol, Chief Executive Officer at Maltese's Technologies Corporation. I must say, I'm amazed by the brilliance of this person, who's actually a good friend, Dave. Dave, would you mind briefing us about this Alliance Scorebox project?
Sure, Ida. Good afternoon, everyone. Yes, this Corebox platform, we started building this since like 2 years ago. But when the pandemic happened, we're supposed to launch this next year, Ida. But due to the urgency of the situation, and since everyone is going into their own digital play, we don't have choice but to come up with a very nice EKYC plus credit, plus lifestyle, and plus AI platform to make sure that we were able to help also our fellow members in the alliance. That's why when I spoke to Lito, we're able to present this multiple times, not only to, of course, to Sir Ben, Attorney Ben, CIC. We presented also this to NPC and to several credit bureaus as well. We're able to present this. So I think it's something that we could um, not only protect but amplify the fintech play in the Philippines. Yeah. So would you like me to discuss the functionality, Sherlita?
Okay, so I think before you present the functionality, Dave, no, just to give a background, no, on how we are now creating this collaboration with Multisys, no. Remember that when we had the presentation of Dave, I think that was about a month ago. We in fact got several calls and SMS and text messages, no, from various players or from our various members. And in fact, we already got more than 10 inquiries expressing interest to take part or to make use of that Scorebox platform. In fact, as what Dave said, we presented this to NPC, to CIC, and even to BSP. And in fact, I'm now putting you on the spot, Dave, because this will be that's why this is something that we would want to announce publicly, for the benefit of the alliance members, that we requested Dave, the Multisys team, for the Scorebox platform to be a pilot platform for pilot participants who will make use of alternative data via the Scorebox platform. So the whole idea is that any FinTech Alliance member who will sign up for the free 30-day POC under the Scorebox platform will be able to enjoy this incentive. No, so far we have 6 participants. No, RCBC, Asia Link, Home Credit, Kashalo, Tala, and RCBC Bank Card, who will make use of the Scorebox platform to leverage on the alternative data. So we have 30 days to make use of it for free. And then after 30 days, or even before 30 days, once we can see that there is so much value in it, then we will now come into commercial terms with Scorebox. And this is something that will have to be with the FinTech Alliance. So
And
now, may I now ask Dave to present briefly the features of Scorebox.
okay, hang on a second, Dave. Before you present this,
Yeah,
can I call back Bianca Villarama of Tala
yeah,
in Northern Alora, please, of Asia Link, because they are part of this pilot project.
I love it.
And may I ask, before you present again, Dave, no, the 30 days of the Alliance members, when can they start on that one?
Anytime.
Or is that
Actually,
30 days right away?
we provided already the access. I think they have the access already, and we gave like 10,000 credits already, so they can now
Okay.
start using it.
Excellent.
immediately. Yeah.
Okay, thank you. Can we call back in Norvin as well, please? Okay, Dave, the floor is yours.
Yeah.
Okay, thank you. Yes, Chair Lito only gave me 4 to 5 minutes to present, so I don't know how it's
Okay.
possible to
Yeah.
implement this. But let me share the screen. Okay,
You can
give me a
do it.
second. Okay, all right. So I hope you can see the screen now. Okay, so let me okay. So this is the Scorebox platform. So it's a 2 year in the making platform. It's quite a big and complex platform. But we believe that this is really not only a fraud tool, but also an eKYC plus credit plus lifestyle scoring. So Scorebox is an AI powered eKYC scoring platform. So you can visit scorebox.com and register. So this platform can be used, but not limited to the following. It can be used by banks and financing companies. Second, by mortgage lenders, credit institutions, and microfinancing institutions. And lastly, even utilities and telecommunication companies as well. So all you need to do is register. If you are an individual, actually, it can be used also by individual who's wanting um, to create their own trustworthiness, personal credibility scoring. So in the future, if they want to amplify their uh, lending, capabilities in the future, like car loans, housing loans, salary loans, they can even apply and use Scorebox as well with the verification. Second is when companies, the like of banks, lending companies, and fintech players, they can now register. So once you register, you receive an email confirmation, and there you go. You can now log in. So example, if I am, let's say, if I am Asia Link example, if I log in, let me log in real quick. There you go. Oops, wrong password. Okay, so once you log in, you'll have your credits. Okay, so we'll be giving free credits to our members in the FinTech Alliance. We can give like 10,000 credits for you to use. This is over maybe 1 to 2 months actually. Medyo nag-extend na rin yan dito.
Excellent.
Lalaki yung free credits. So you can use this platform by doing advanced search engine if you like. You can have first name, middle name, last name, birthday, mobile number, and even the city and municipality. Or you can have a very basic search engine, okay? The like of first name, last name, birthday, and a selfie. Or you can even upload the ID. Just in case that you don't want to use this interface, you can consume the API. So we have an API. So API is already in the website. You can integrate this. It's easy to integrate. Everything you need is already here. Just in case you're using PHP, you're using Node, you're using a Python or Ruby or jQuery or Go language or curl, now you can use the system. Either you have a website or mobile app, you can use the API. And then let me show you how it works. So the moment that you do the KYC, if you have the app or website during the registration process, example, if I am, let me try to use Angelito, if you don't mind me using your name, Chairman Lito Villanueva. Okay, so let's say I don't know your birth date. Let's say I'm trying to pretend you look so young, so I'm gonna let's say 01/01/1980 example. Okay, and then I'll do a selfie. Okay, so let me I'll do a selfie. So once I do a selfie, it depends on you if you want also to upload an ID or maybe a passport or driver's license or any kind of ID. Once you do the submission, the system will not disclose anything. Okay, so we presented this many times to NPC. They guided us along the way, and there's no such thing as disclosing any information, but it will provide you a score. So the score of Angelito Villanueva, actually the no no the uh, last name is also mistyped. So the score is 9.1%. So meaning no identity. There's no such thing as Lito Villanueva. Credit scoring is also zero. Biometric is also 0. And then we have the lifestyle. So maybe like Facebook or Instagram or Google, our web crawler able to get some information about that name. Okay, but irrelevant na yon. Okay, let me now try the real information of Angelito. Angelito Villanueva. Is this the complete name, Sherman Lito?
Double L, Villanueva.
Is there a
Villanueva, yeah.
privacy clearance here?
Okay. If it's okay to know your birthday, your real birthday, if it's okay, Sherlito.
I don't want to share my birthday. Baka they might send me so many gifts.
Anyway, what I'm saying, how could I test it without real information? Sige, I will use my ano na lang. Let's say I am David Jr. Almirol, 05/16/1980. You can send me gift if you want. Joke. So now you can. I'll do a selfie. We also have a liveness testing actually, so we can even implement a liveness testing so that even they will send a photocopy or maybe a sample video. The system can identify if it's live or not. So the generation of score is very agnostic, as mentioned by Attorney Ben a while ago. He also explained the beauty of alternative data usage. Will be able to come up with a nice scoring. So now my score is 93.5. It's high because David Jr. Almirol with that birthday is existing. Okay, existing to a certain source, whether CIC or to other sources that we have consent. So meaning we don't want to have a query without any consent. So we should follow the rules and regulations of NPC that we can only do scoring if there is a consent or we are working with with an entity that they're authorized to do this, like CIC and other credit bureaus. Okay. Second is this is the real David Almirol. So just in case if someone will use my name and they will upload or do the selfie of other person, the system will know that that guy is lying. So the system will know that this is not the real David Almirol. Another one is credit scoring. So this is linked already to multiple sources. So it will give you a scoring for credit. Okay. Another one is lifestyle. So this is a new scoring where the system will analyze the financial capability of a certain person. Okay, so example, the salary, maybe the shopping, the payments, electricity, water, cable payments. Maybe you're buying expensive things online, but it will not disclose any of those information. So everything is categorized. Okay, so no exposure of any data. So example, if I am Discartec, example, RCBC Discartec, and I'm trying to lend to small borrowers. They want 1,000 or 2,000 pesos. Sometimes credit scoring will not be an efficient way to do it because normally these people don't have any credit card, no car loan, no housing loan, but lifestyle can be used to them so that the system will know if they are capable of paying 2,000 pesos or 3,000 pesos, something like that. So you can also create your own algorithm here. So example, if I am AsiaLink, now I can design, I want EKYC, let's say 30%. I want biometric to make sure that they're not lying, submitting their document to us. Then let's say I don't want to use credit, example, or maybe 10% of credit. Okay, because I still need to do that. Then I do, let's say, 30% of lifestyle. Now you can now create your own scoring for AsiaLink. Okay, so that's the way to do it.
Yes, thank you so much, Dave, for showing this to us.
Thank you.
No,
Yeah.
and we will be going through this also with FinTech Alliance members in a lot more detail. This is called the score box, and this is the one under test with CIC. Is that correct?
Yeah, the intention is also go and have a direct connection with CIC. Right now, we're using other third-party integrations as well. So I think it will be more efficient if we do some kind of like direct integration already with CIC and other sources.
Yeah.
Okay, so
Just to add to that, Ida, no, in fact, I think AsiaLink is already starting the pilot, no, I think, as confirmed by Apple's, no.
Nice.
That's right, no, no.
Yes.
So, yes, I think you started the pilot already. And in fact, for RCBC and Bankcard, we're starting the pilot by first week of, actually by this month, no? Before the end of this month, we're starting it. And in fact, I received just now several SMS as well where people are watching this live event. And some cooperatives are now asking if they could also enjoy this facility, and at the same time, the Credit Card Association of the Philippines and even the Rural Bankers Association of the Philippines. So this is something that, because the intention of the alliance is to make emerging technologies available to all, no? So that at the end of the day, the ultimate winners would be our consumers.
Excellent. Okay. I requested to call back in Attorney Ben, President of CIC, considering that this is in overall, we're talking about the credit scoring, and this is for the final photo op. For Alliance members, we do have 30 to 60 days trial on this. Do log in, do get your 10,000 credits. We don't want to miss the chance to see how this works. For everyone, kindly look into the camera. Let's have our final photo op. 1, 2, 3. 1, 2, 3. Thank you again, David, Charlito, our panelists here. That's part of this pilot, Norvian and Bianca. Tama ka ba, Bianca? Sorry, I kind of nearly lost that name. And Attorney Ben, earlier on, I forgot to congratulate. So a round of applause and congratulations to the Scorebox CIC and FinTech Alliance. And we hope to make a good success of this because we can make a lot of headways by having this. It may sound not big, but it's really going to be humongous. And this can be implemented, including all the other FIs and lending institutions all over the Philippines. So a round of applause, please. Thank you.
Thank you so much. Thank you.
Thank you. Guys, don't go. Our time is up. Time to close this wonderful webinar event. Chairman Lito, kindly give your closing remarks.
Again, thank you so much to all our FinTech Alliance members, to all our speakers, of course, to Attorney Ben, to Director Joyce, and of course to Chair Liboro of NPC, through Attorney Puzon earlier, and of course to Dave of Multisys, who actually accepted the challenge to share his platform for with the industry, starting with the 6 pilot participants that we have this afternoon. So as I've said, it's RCBC, Bankcard, Home Credit, Kashalo, Tala, and Asia Link. And we will be expecting more members from the Alliance who will also be signing up for this free 30-day POC. And we hope that we will further encourage more players or lenders in the country to be able to make use of alternative data, so that more unbanked and underserved Filipinos, more new to credit individuals would now have access to responsive and responsible finance. Thank you so much and have a good day, everyone.
And on behalf of FinTech Alliance, thank you so much to all our wonderful distinguished speakers, NPC Commissioner Attorney, NPC Representative Attorney Ana Puzon of NPC, of course, CIC President Attorney Ben, BSP Director Attorney Joyce, and all our panelists. Do stay safe and healthy. Bye, everyone.
Thank you. Bye.
Thank you. Bye.